Maybe your friend, your mom, or maybe even a random person on Instagram has said that everybody needs to get an IUL. The reality is that an index universal life policy is absolutely not a great idea for everybody. There are plenty of reasons why an IUL may not be a good fit for you. I'm going to walk you through 5 signs that an IUL is not the best idea for you in this moment. But before we get into that, I am curious, who is it that told you about an IUL? Like, why do you want one? Go ahead and share that in the comments. If this is the first time that we are meeting, my name is Nobu Musakiwa. I'm a licensed financial strategist and I help working professionals 40 and over save smarter and pay less taxes by leveraging cash value life insurance like an IUL. If by the end of this video you feel like an IUL is for you, the link is in the comments to work with me. Before I get into reason number one, I'm going to give you a little bit of context. There are a few ways that life insurance companies win. Way number one is when people get term life insurance policies. Term policies are super cheap for the customers and have a big payout, so it seems like it's a good deal. But the reality is that 98% of term policies get to their expiration date with the person still being alive. What that means that if you have a term policy for 10, 20, 30 years, you pay that whole time. At the end of that contract, you are still alive, which is a good thing. But also on the part of the life insurance company, it's a good thing for them because you never passed away. Second major way that life insurance companies win is if people don't keep their contract term on their permanent policies. Let's say you are approved for a policy, you're supposed to pay $300 a month until you pass away. You pay that $300 a month for 5 years and then things happen and then you stop. Essentially, the life insurance company is going to get to win because if you had kept paying, they would eventually have to pay out that insurance policy at the time of your death. But because you stop paying, they no longer have to continue with the contract because you did not live up to your end of the bargain. Which brings me to reason number one why you should not get an IUL is not having a specific use case for this policy. Because the reality is, with an index universal life policy, this is a permanent policy. So it's going to require a long-term commitment in terms of a payment. And if you do not follow through on that long-term commitment, then you are going to essentially lose this policy. What I find is that with most things in life, if we have a reason why we're doing something, and if that reason is important, then we're going to actually stick to that thing. So if you just want to get this IUL because your friend said it's a good thing, if you're in some kind of financial bind the next year, the first thing that's going to go is the IUL because you don't have a specific use in mind for it in order to actually sacrifice keeping it. Whereas if you know that this policy is specifically for retirement funds, or this policy is specifically for my newborn so that when they're 35, there's $1 million in there, right? So if there's a real tangible and emotionally pulling reason as to why you are opening this IUL and why it makes sense for you to commit X amount of dollars for X amount of time, then the chances are higher that you are actually going to keep it long term. If you actually keep your policy long term, then you are winning because you have insurance in the event that you pass away soon. You are also winning in the event that you live long, which is what we want, because you also will have the ability to take cash out of that policy to leverage in other ways. Like I said, when you are getting an IUL, this is a long-term play. So sign number two that an IUL is not for you is if you are expecting this to be a get rich quick situation. I have a lot of people that call and they think, okay, I'm going to put in $200 on month one and then month two I can take out, $500. That is not how this type of policy works. An IUL or any cash value life insurance policy is very much a slow and steady play, especially if you're putting in funds on a monthly basis. If you're looking to get like a quick return on your money right away, then you probably want to look into trading and that kind of thing. Whereas this is more of like a slow and steady thing. So if you have had a brokerage account for a long period of time and you put money in consistently and you're comfortable with waiting, this is good for you, right? Or if you have a 401k that has a high balance because you have been consistent and patient with putting funds in, this is for you, right? If you have property that you've purchased and like you don't flip it, you like just chill and wait and see the value going up, then you are probably a good fit for an index universal life policy. If you're someone that is not patient, if you're someone that's going to be checking the balance every single day If you're someone that's expecting to be able to put a little tiny amount in today and take out a whole bunch tomorrow, then this is not for you. This is very much slow, steady, chill, long-term play. So patience is very much needed. In addition to your returns being steady over a long period of time, there is also the fact that because you are leveraging a life insurance policy as a savings vehicle, the way that it works is you have to pay for your insurance, and then you're actually putting in more money than what your insurance costs. So you have the ability to have that savings account or that personal bank attached to your life insurance. And so because of that, how much you're putting into this every month is going to be a lot higher than what you'd be putting in if you were just getting a regular life insurance policy. And so if your goal is, I want to get the cheapest life insurance policy possible, an indexed universal life policy is not a good fit for you because it's not going to be your cheapest option possible. Your cheapest life insurance possible is going to be life insurance that is just life insurance, versus if you're getting an IUL specifically designed for maximum cash value, then the idea is that you are paying in more than your regular insurance so that you can take advantage of those benefits that you get from having money in a life insurance policy. So if you're specifically leveraging an IUL to be able to use as a savings vehicle to take advantage of the benefits of having funds in life insurance, like having funds grow in there without having any capital gains tax, being able to take money out of there and not have it count as income tax, having access to the funds and essentially having your own personal banking system, and of course having the actual life insurance as well. So if you pass away soon, you have that life insurance that you leave behind, and that again is not going to be taxed. If that's the goal, we can't do that and just get a regular policy. So the caveat is that if you want to be able to take advantage of that and play that game, you got to be willing and be able to pay more for your life insurance. And if that pains you, if that doesn't work for you, then an IUL is not a good fit for you. Similarly to that, because we are growing our funds in a life insurance policy, you are always going to have the cost of life insurance. And because it is a life insurance policy, there's also going to be fees along with that. If you are super concerned with what is the fees, like what are the costs, and trying to do all this math to get the cheapest fees possible, then an IUL is probably not a good fit for you because you're thinking more of like, what is this going to cost me, which is more of a broke mindset, versus looking at it as what is this going to gain me. So instead of looking at, okay, like what are all these different fees, just looking at the bigger picture of, okay, I'm going to put in 250K and I can pull out 1.7 million. So that makes sense to me. That's more of an IUL type person who has more of a wealthy person mindset. But if your mindset is how much is it going to cost me and worrying about the cost itself versus your outcome, this is probably not a good product for you, babes. And sometimes you're concerned with costs and fees because you are not in a financially stable position. And if you're not financially stable, that is a big sign that an IUL is not a good fit for you. As I said earlier, this is a long-term commitment, and this requires putting funds over a long period of time or putting large amounts of money over a shorter period of time. But either way, it does require financial commitment. And if you're in a place right now where you're not able to pay your basic bills, then an insurance policy where you have to pay more than just the basic insurance costs and also do that over a long period of time is not a financially sound move if you don't have the basics in place. So if you're not saving regularly, if you don't know what's happening with your money, if you're behind on bills, you're living paycheck to paycheck, like you are not organized with your funds, you wanna get a routine and get a system in place where you are saving regularly, you are on top of your funds, you are financially stable. Once you have that in place, then you can add in a cash value life insurance policy. Doesn't mean that you should not get life insurance or life insurance is not a good idea. It's probably a good idea to get something cheaper and something that you are not overfunding like you would with a cash value policy first. Once you're stable, then you can transition to a custom designed cash value policy like an IUL where you are actually able to leverage your funds and have them grow for you faster. Getting an IUL when you are not financially stable is like you trying to run a marathon when you can't even run a mile, right? You first have to be able to do that 1 mile and do that 1 mile consistently and then build your way up to get to the marathon. So get your finances in place, get that in order, and then look into your custom design IUL. And a bonus sign that an IUL may not be a good fit for you is if you are a DIYer and you're trying to figure out how to do this on your own. Unfortunately, unfortunately, if you want to get an IUL that is custom designed for you to maximize the cash value in it, you are not able to do it on your own. An IUL specialist has to actually create the policy for you. They're going to take a policy and do some adjustments so that essentially more of your funds are going into a separate cash bucket as opposed to an actual life insurance policy. Whereas if you do it on your own, you don't have the toggles necessary, if you will, to make those adjustments. You'll just have a click and play basic policy, which is not going to maximize your ability to actually grow cash in that policy. So if you want an IUL for cash growth, you have to work with somebody. If you're determined to DIY it, you're going to end up with a regular policy that you think is doing the same thing for you, but it really isn't. There are a few other misconceptions and misunderstandings that people have about getting an IUL, including thinking that anybody can get one, which is absolutely not correct. In this video, I go through all the things that you need to know and be clear about before you get an IUL, and that should clear up some of the misunderstandings that you probably have right now. I'll see you there.